All right, hello there, everyone. All right, welcome to Friday Portfolio Cash with Terence. All right, and thank you for those of you who have joined me early. All right, it is our 11 p.m. start in Singapore time right now. Okay, now, so the adjustment in time has to do with the opening of the U.S. markets. Right, the U.S. markets right now open at 10:30 p.m. All right, Singapore time or GMT +8. All right, so we will adjust our sessions to about half an hour after the market opens, okay? Now, so for those of you who are new together with me, all right, and this is the first time you're joining this session, right, we are using an external software to do the Facebook live stream, right? Now, so I need all of you to go to the link that you see in the banner, right, streamyard.com/Facebook, right? You will be brought to a pop-up page, right? And there you will see a Facebook button, which asks you to click to approve it for Facebook use, right? Now, once you have done that, right, we will be able to see your profiles, right, when you start leaving comments during the Facebook live session, right? Now, so this will help us identify you, all right, when you post questions that you want to ask throughout the Facebook live session, all right? So if you can help me do that, all right, that would be really awesome, okay? Now, so once that is done, all right, I will hide it, all right, before I forget and get scolded by our regular members. Right now, next one over here. Right now, in these sessions on every Friday, I will be discussing trades that I will put into my own portfolio, right, and cash flows that I'll be adding on a week-to-week basis to the portfolio that I'm building, right, with the public in general. Now, this session on Fridays, which I run every single week for year 2 right now, okay, together with all of you. Right now, I'd like to thank you for all of your support, all right, throughout the last 1 year, all right, and we are heading into year 2 right now, all right. Of course, we look towards the better performance, all right, even though it's much harder and harder to trade in this exceptionally overvalued markets right now, but we'll continue to do so, right, and with all of your support, right, by turning up each and every week, of course, it's going to help me do that. Now, so if you can also help me click the like button, right, while you're joining the session, and perhaps if you find it really useful, all right, to click the share button so that you can reach out to your friends who are also investing, right, so they can learn more about option selling and what it can do for your portfolio, right, that will be awesome too. Now, so let me emphasize, all right, the concept, all right, and the aim and the goal, right, of my Friday's public session. Right now, in this session, all I aim to do, right, is to execute one of the simplest, right, but most effective option selling strategy, right, that any portfolio can use, right, and that is called the portfolio puts. Right now, the portfolio puts also have a technical strategy term, right? It is also called the cash secure puts. Now, what is cash secure puts? You can sell options, or more specifically, put options, right, based on margins, right? But on Fridays in this portfolio, we are not going to do so. Why? Because when you do any trading on margins, you run the risk of running out of cash because you're trading on leverage. But when you're trading on pure cash, right, nothing will happen to your trade. Why? Because we only pick, all right, fundamentally strong undervalued stocks. So not only are they fundamentally strong, right, but they are also undervalued and unloved by the market right now. So you may be wondering, Terence, if the markets are hitting new high, are there such stocks that are available out there? Right, there are. Right, because you can ask our followers for the last few sessions, right? We've been hitting, right, many of these stocks, all right, even over the last month itself. Right now, I lost my mouse. Right now, so we have been hitting quite a couple of stocks in the last few months itself, right? And we are still continuing to do that. Right now, so like I said over here, right, we have a Facebook user. And this is what happens, right, if you do not go to the streamyard.com/Facebook link, right, and then click the approve button. Right, this is how we see you on the back end of the platform. Right, so if you go ahead and do that right now for me, all right, that would be really awesome. Right, and hi, Mei Ling. Right now, so for the rest of you who have already joined us in this session, right, it will be great if you could just drop a note to say hi, right, so I know you've joined us in this session live, okay? All right, now, so yes, all right, now, so on Fridays, this is all done with full cash, right, and while selling options, right, more specifically put options, right? Hey, Jimmy. All right, now, it'll be great if you could just click for the StreamYard use, okay? All right, thank you very much. Oh, wow, we have so many Facebook users. All right, thank you very much, Sharon, all right, for joining us over here. Okay, awesome. All right, really awesome. All right, thank you very much. Okay, all right, now, it seems like StreamYard tends to reset their buttons every now and then. right? So Jimmy, unfortunately, I'm seeing you as a Facebook user once again. All right, so you perhaps have to do that all over again. Jason, all right, I can see you. All right, all right, awesome. Thank you, Jason. All right, for joining us week after week. Yeah, all right, it's really awesome to have you here. All right, now, so without further ado, okay, let's get our week started over here. All right, so let's go through our portfolio, which you see on the screen right now. All right, and the first position is none other than VZ over here. All right, so let's go through them one by one. Right, and we have VZ right now trading at $52 right now. So what do we have in our accounts? We have a stock assignment, right, where we paid $57.50 for the stock, right? And after deducting the premiums that we collected for the put option that we sold, right, our cost basis of the stock is around $55, right? And currently we have a $55 call option, right, that expires on the 17th of December, right? So as of right now, there's effectively nothing, right, that we will need to be doing on this particular stock, okay? Now, so let's move on to our next stock position. It is also another assignment that we dealt with, right, and that is Rio Tinto, right? So Rio Tinto costs us about $75 right now, right? And we have an option, all right, a $75 call option, which expires on next Friday, right? So there's no need for any actions to be taken on this stock as well. Now, next one, right, is one of the few growth stocks that we've traded, right? And that's HIMX. Now, HIMX actually shot up last week, right? And then we held on to the options, right? And this week it's come back off a little, right? So right now the stock is trading at about 10.67, all right? So we have a $12 call option, which expires next Friday. So no actions needs to be done as well, all right? Now, yes, Jimmy, all right, you're back. All right, you're back. All right, now, so I can see you right now. All right, so, StreamYard is probably doing something on the back end. All right, Sharon. All right. Oh, thank you very much for your kind words over here. All right, I'm glad it benefits all of you. All right, because option selling, all right, has been misunderstood by many people as a very risky strategy. Right, but any strategy that invests in the market has its own risk. If you know how to manage the risk, right, it is actually one of the best performing strategies out there. Yeah. All right, now, so let's go to our next position over here. These are our 3 stock assignments, and we're still managing that. Now, we do have a GILD position in Gillette Science. We have a $67.50 put option, which expires on the 17th of December. All right, so Gillette has already rebounded. All right, and I do believe, all right, that we should see some small amount of profitability on this option, okay? Now, let's have a look at the premiums right now. 17 December, $67.50 puts. There we go. All right, there we are. All right, now, so this put options cost around $2.35, $2.36 right now. All right, we sold it for about $3. So as all of you can see, we have turned the trade profitable. Right, so the stock went lower, all right, on earnings, right, but because of the strong fundamentals, right, there is nothing that we need to worry about effectively. All right, now, so let me pull this. Yeah, there we go. All right, now, so there we are. All right, now, so we were trading the stock somewhere around here, right, and then it plunged on earnings, right, but after that, all right, it started rebounding. Right now, so if I were not in a trade before the earnings itself, I would actually have re-entered right after it stabilized and started rebounding on earnings. Right, so that would have been something I've done over here. Right now, so Andy, right, as usual, right, awesome to see you're making some good profits, right, from the stocks that we are talking about on each Friday. Right now, next one over here, right, we have we're gonna let it run for a couple more weeks. Okay, right now, the next one we have over here is Intel. Right, so we have Intel 52.50 for 17th of December. Now we traded this on 8th of October. Right, so let's see where it stands right now. All right, so likewise for Intel, right, we were trading it somewhere over here, right, and then we had the rebound, right, and then it crashed and burned, right, and was totally unloved, all right, after its earnings, right, but it has subsequently rebounded very strongly. Right, which I already assumed it was going to do, right? Why? Because, right, if you look at its earnings, right, its earnings was a total blowout, right? Now, what do I mean by a total blowout over here? Let me show you what the estimates were. Now, the estimates, oh, it doesn't want to show up. Need to raise it a little bit higher. There we go. Right now, the estimates was around 110, all right, and the company reported 170. Right, and yet the stock fell by almost 20%. right? Now, that's absolutely trash over here, right? This is the ultimate of what we call market inefficiency, right? Now, why do we say this is market inefficiency, right? Because they have pressured the stock so low just because it is not loved by the market right now, but it doesn't take away the profitability behind such a great company, right? So once the market recognizes how cheap the company is actually trading, right, they will come roaring back, right? And that's exactly what they've done over here. All right, now, so let's see where our put option stands at the moment. All right, so we have a December expiry again, 52.50 puts. So it costs about $2.50 right now. All right, so $2.50. All right, we are almost back at break-even level. All right, so we are closer to back to break-even over here. Now, CPB, right, we have a $40 put option, right, that we sold for 110. All right, so let's see what it is worth right now. All right, 17 December, $40 put option. Let's see what it's worth. All right, it's worth about 80 cents today. So we have about 30-cent profitability. All right, so we have a 30-cent profitability over here. And I do think that the company is still severely undervalued, right? And it's on its way up, all right? So I'm going to hold on to this position for a little bit longer. Right now, Western Union position since last Friday has done absolutely nothing, all right? So we do have an $18 put option, right? $18 put option for 17 December, all right? So let's look at how much it's worth today. All right, $18 put option, which is worth about 55 cents. All right, so we have a slight profitability as well on the Western Union trade. All right, now, so we'll continue to hold on this. All right, we have about another 5 weeks to go. All right, and some decent profits. All right, now, so we hold on to this. And today, let's go to the new portfolio ad. All right, now, so the new portfolio ad, all right, Intel. All right, Andy, well done. All right, good trade over there on Intel. Seems like you made some decent profits over the last couple of weeks. Now, so let's go to the stock that I want to talk about today. Now, the stock that I want to add today to the portfolio, right, will seem really weird to many of you, all right? Now, but here's what you came for today, all right, and let's do it right now. Now, today, I'm going to invest in Ferrari. No, not Ferrari itself, but Ferrari of the motorcycles, all right? So today, we're going to look at another unloved stock by the market, all right, and that is Harley Davidson. All right, now, so whether I like it or not, I don't ride bikes, right? And I do not, fancy the brand of Harley Davidson, but I do know, right, that it has a very, very strong branding, right? It does, all right? And what it shows you over here is that the company right now is trading at an 11 PE, all right? Now, that is a very, very undervalued kind of pricing model, right, which the company has, right? And just to put it into a quick perspective over here, right, if you go to the Analyze tab, right, you can actually see, right, that the company is trading around a 10 PE, or what we saw was 11 just now, right? But the 5-year average of this company is about 16, right? Which means that the company is really, really cheap right now, right? The company can probably go up another $4 or $5, right? And that would just bring it close towards its 5-year average valuation, right? So this company right now, right, is profitable, right? And another reason why I like it as well, right, is the fact that, all right, let me pull the chart a little bit longer. Right, it's the fact that if we look at the last 2 quarters of earnings, right, now let's do the comparison again. Right, unfortunately, I have to pull this up again. All right, now the previous quarter, the company estimated 130, all right, and then it reported 140, all right, and yet the stock was punished by being sold down. Right, so back then it was $42, and then it was sold off all the way, right, into before the earnings over here, which is $37, right? And then the most recent earnings, right, the company estimated 80 cents, but it reported 118. So can you see what's happening? Right, the company is reporting better than expected earnings, right, and yet, all right, it was not receiving any love from the market at all, right? And finally, all right, about a week after its earnings, right, it had a pop up, right? But look what happened. After the burst up, the gap up over here, right, it started coming down again, right? So now it's trading around this, resistance turn support level, right? And, all right, the stock looks like it's bouncing off this level, right, over the last 2 days, right? So I do want to establish a position over here, right? And I'm going to take a position for December as well, right? So we're going to try to benefit and position ourselves for the year-end rally, right? So the stock is about $37.98. All right, let's take a $36 put option over here. All right, so we'll take a $36 put option for about, let's see what we can get over here. right? So do remember, if I'm aiming and selling the $36 put option, right, it also means that I'm prepared, right? I'm fully prepared to pay up $36, right, for each of those shares that I'm selling, right, if anything happens to the trade. Yeah, right now. So if I do get assigned the stock itself, right, I'm prepared to put up $3,600, right, for every one option that I'm selling over here. All right, so that's the deal over here, all right, for cash secured puts. Now, so let me quickly bring up, all right, and see how much I can get for this trade. All right, as I see some of you are already jumping my gun as per usual. Andy, it must be you. I'm just kidding. All right, now, so let's go. Right now, so I'm going to take a typical 3 option contract trade on this, right? And let's see what I can get. All right, I'm not going to fight the market over here. All right, so I got my order filled at about 91 cents. All right, okay, almost 91 cents over here. All right, now, so I'll just bring it over for all of you to verify. All right, so about 10:17 on the platform, which is the platform time right now. All right, I've got filled on the HOG, right, December 17, $36 puts. I sold 3 of these options at about almost average 91 cents. All right, so I got about 91 cents on an average for the 3 option contract. Now, so let's go ahead and fill up the details. All right, and we'll calculate the ROI as well. Okay, now, so let's do this. All right, it is trade number 76 on this portfolio. 36. This is the 12th of November. That's after 11/11, right? And we collected 91 cents. So this is going to pay me $273 in portfolio cash, right? And let's go ahead and calculate the ROI, shall we? All right, now, so the ROI on this trade is going to pay me 91 cents on an investment of $36 per share, right? That's about 2.53, right, for an option that expires in 35 days, right? So an option that expires in 35 days, it's 5 weeks, all right? So that'll make this trade a 5-week trade, all right? Let's go ahead and divide this out. All right, that's still a 26.29% return, everyone. So can you see, all right, my ideas of how I build a long-term portfolio, right, is still very, very similar. All right, we try to add a stock every week for cash, right, when there's an opportunity that presents itself, right, and then we try to aim for a trade with an annualized return, right, that starts us off at 20% per annum, right? So we've got one over here that pays us about 26% per annum. Right now, this is all assuming if we can repeat the same trades over and over and over again. Now, the key is this: we do not need to do this on the same stock, all right? Okay, but we will constantly do it, all right, with every trade. So every single put option that we sell brings us a step closer towards the annual 20% return target, right, for a full cash portfolio. So you can think of it this way: if you're investing with full cash and 0 leverage, and you are achieving a 20% return per annum, year after year after year, and you compound that, right, you would realize that it is actually a very, very powerful return. Now, why do I actually say it's a very, very powerful return? Now, because, right, if I'm not wrong, right, if I'm not wrong, the formula of 7, right? Yeah, okay, I've not used it for so long, right? Now, what it means is if you divide it out by 7, right, you will actually be able to double your money in a very, very short time. Yeah, okay, now, so I'm happy with that. And this is the trade that we've gone with, right? Now, so we have executed 76 trades in total, right, for about going into year 2, right? We are what? 4th month. We are into our 4th month of year 2 over here, right? And out of the 76 trades, I believe we have only been assigned on 5 of our trades. That means we only have to deal with stock assignments 5 times. All right, rule of 72. Thank you very much, Jason. Right, see how long I've not done it. All right, yes, that's good enough. All right, now, so the rule of 72. Yes, you're right, Jason. Thank you for reminding me. I'm getting old, man. Yeah, all right, now, that means that you're doubling your money, right, at about every 3.6 years. Right, so if you can double your money every 3.5 years, right, is that good enough? Right, it's definitely going to beat the game at the banks or the financial institutions, right, or pretty much any of the funds out there, right? And you're doing this all on your own, right? And to add on, right, we are adding about 1 stock every week, right? It doesn't take a lot of your time over here, right? And that's how we built this portfolio, right? Very, very laid back, right? Very, very little time put into it, right? But yet it still brings us a very, very decent return. Right now, everyone, this is it. Right now, so today's position adds on $10,800 into the portfolio exposure, right? And my portfolio is exposed to about $98,000 right now. The total value of this portfolio is about $117,000, right? So right now I'm about 80% exposed, right? I would say, yeah. All right, let's do a calculation, right? So, yep, 83% exposed right now. Right, so we are about 83% exposed, right, into the market, right, even though, right, the market are hitting all-time highs, right? So we continue to do so because we trade based on fundamentals, yeah? All right, now, so I do have some time to pick up 2 questions. So while I'm still talking right now, if you have any questions that you want to ask about the strategies that we execute over here in our Facebook live sessions, please go ahead and post them in the comment section, okay? All right, please remember to keep them on the portfolio puts. Yeah, all right. For any members, if you want to ask questions, we've just completed our weekly coaching session with you. All right. Now, but if you still want to do so, all right, you can do this in one of our live sessions together. Okay. All right. Now, so Mike, all right, let me bring up your question over here. Mike, this is actually a very, very interesting question. So Mike is asking, is it common, right, for stocks with good earning results, all right, to not be loved by the markets, causing it to fall? All right, it is. This is the clear case of what we call market inefficiencies, right? And right, this is where, right, the value investors, right, try to dig it out, right? But I do this in a very, very simplistic format, right? I do trade around a very, very close basket of stocks, which I constantly look at over the last 10 years. So when any of these stocks exhibit, right, these kind of characteristics, right, I will be able to pick them up very, very quickly, right? Like what you saw me do with Intel, right? Like what you see me do, right? With also some of the other positions in our account, right? Like CPB, right? We did it on KSS as well, right? And then we did it on Western Union as well, right? So these are all the stocks which are actually very profitable, right? And at the same time, they do actually pay investors a dividend amount as well, right? And yet, right, they are not being loved by the market. Yeah. Okay. Now, do understand, we are not trading red hot stocks. We are not, right? We are just trying to simply execute, right, what we do over here, right, and try to profit from it. Yeah. Okay. All right. Now, no, not today, Andy. All right. Today, I just want to add 1 position over here into the accounts. All right. So not TUP. All right. So Andy's asking, are we going to add a TUP position into our accounts today? All right. Not today. All right. Now, so Andy. All right, now, so yes, that's a reason why it's not being loved, because the market feels that it's losing market share to AMD. But then, right, if you used to own 80% of the market share, right, and going from 80% to 78%, that isn't losing much market share at all, right? Of course, it's worth a lot of money to AMD, right, but it's actually not very significant, right, when it comes to Intel. Yeah, right, but of course, the market doesn't love that, right? But they fail to see, right, that it still remains a very, very profitable company. Yeah. All right. Now, Chris, right? UPST. I'm not too sure about that. All right, but we can jump in, right, and quickly have a look. Now, I say I'm not sure about that because I'm not familiar about this company. Yeah. Nope. I'm definitely not interested. All right. Why, Chris? All right. Look at the PE ratio. All right. 367% PE. All right. No way am I going to touch anywhere near such a company over here. Right. I would assume that this is probably, one of those growth stocks. right, and growth stocks, right, would require a very, very deep valuation model, right? So this is not my style, right? And I will not try to pretend, right, that this is going to be my style as well, right? So these are the kind of stocks that I absolutely stay away from, right? And I stay clear of. Why? Because when any of these stocks drop, like what you say over here, Chris, right, I have absolutely no confidence, right? Like you see, all right, now this is the damage, right? It's gone from 400 to 250, right? In what? Right? In 1 month. That's a month, right? And that's the problem when you're chasing these kind of performance stocks, right? Now, of course, when it breaks out over here, right, you're all but happy, right? But if you are the buyers here, right, because you're trying to chase before it runs up even higher, right, then, right, you're not going to be very, very happy right now, right? Now, I say you're not going to be happy. Why? Because, right, when it gaps down like this, right, are you still confident, right, that the company will be able to deliver, right, on what is promising over here, right? Why? Right? Because yes, look, right, the earnings, right, look like it's growing, right? The earnings look like it's growing. Yes, all right, it is, right? Now, so, the problem is, right, in this kind of situations, I would have to go and dig deeper, right, just to find out, all right, what exactly is wrong, right, with a company like that. Yeah, right. And I hate doing this, right? I hate doing this, right? And look at this. In the last 5 years, the company has not been profitable. That's why there's no PE results, or it's probably a very newly listed company, right? So it lacks the history of me being able to dig it out. Yes, I think it's just listed, all right, in sometime in 2000. Yeah, all right. Yes, all right, 2017, all right, I would say. Yes, 2017, right? It's not been profitable until the 2020 over here. Yeah, all right. Okay, now, so definitely not, all right? I'm not interested in any IPO companies. This is not my style anyway. Yeah, all right. But Chris, all right, if I do know that you're a value investor, all right? So if you can do the deep analysis on these kind of companies and you feel, right, that it is vindicated, right, to go ahead, right, and trade such an expensive stock at these kind of valuations, right, then of course you can, right? But the key is this: always justify, right, what are the good supporting factors before you trade. So just like what I tell my members every single week, right? Why do you want to do this trade right now? Are there enough factors that support your judgment, right? If you end up realizing, right, that you're just trying to take this trade, right, because of what's available, right, and the profits that you think you can make, that is not a strategy, right? You can't justify the trade. Yeah, right now. So that's what I'm trying to say over here, right? Any trade that you want to take, especially in the markets right now, right, you've got to find a full conviction, right, in that trade itself. You need to be very justified of why you should be taking that trade, right? Why? Because there's a lot of risk in the market right now, right? Is it bullish? Yes, it is bullish, right? But we have to remain cautiously bullish right now, right? Why? Because it's an absolute vacuum on the upside, right? There's no short sellers that are going to go in right now, right? Everyone was hurt, all right, in the recent push up. That's why the market was able to go up so fast. So right now, up there, right, it's thin air, right? But at the same time, right, all it takes is one risk event, right? One risk event to come out into the markets, right? And the markets will shake. Yeah, all right. That's why, we are in, right, kind of like a caught in no man's land kind of situation right now, right? Market has already gone up by a lot, right? It's overstretched. Yes, it can continue to go up higher, right? But every day it continues to go up, right? It accumulates more and more risk on the downside, right? So this is where it becomes tricky over here. All right, now, so I hope I provided some good, valuable information on this Friday session as well. All right, and that's it. That's it from me today. All right, and I hope it's been great and fruitful for all of you. And we'll be back next Friday. All right, so I'll be back with all of you next Friday once again. Right, and we'll look for another great stock, right, to create some portfolio cash together. Right now, so if you found this week's session useful once again, right, do help me to click the like buttons, right, and then also to click the share buttons to hit it out, right, so we can get as many people benefiting from the information that we share, right, as much as possible. Okay, all right, now, so in the meantime, thank you very much for joining me once again, everyone, right, and I'll see you and catch you next Friday live over Facebook again. All right, thank you very much. This is Terence Tan, the I'm Possible Investor. All right, and I'll see you next Friday. All right, bye for now, everyone.